Hi, everybody. Welcome back to the IC Topic Chats, the second core topic for the day. Today is December 7th, 2023. These core topics, by the way, are sessions we repeat every year. So if you watched the session on core topic key performance indicators in December 2022, and it looks exactly the same because mostly it is. Anyway, so the point of today, this topic, the second topic we're covering on December 7th, 2023, is to talk about those things that perhaps are indicating to you that your practice is going well. The number one thing that people always talk about for their key performance indicators. All right, my computer just stopped working, is profitability. Oh, look, it's working now. Advanced profitability right there. Pretty simple. At the end of the year, do you still have money in your account? Right? If you look at all the revenue you brought in, minus the expenses of running your firm, do you still have any left? Have you run out of money? Is it profitable? I used to look at this when I was a one-person operation as my expenses, and I was finally in the red, oftentimes around when we'd meet at the AEA, out of the red and into the black. In the red means you're not profitable, you're running a loss, and black means you're running profitable. And my profitability would finally hit the positive piece in around October. It's a little bit of a more complicated conversation now that we have a larger company. And it's important to think about these things and plan ahead, but that's probably the first KPI for most of us. At a certain point, particularly if you have multiple people working on a project, or you're thinking carefully about your time, you're going to start thinking about project profitability. So this is how much revenue that you have minus the cost to conduct that work. That's your project profitability. So it's broken down multiple projects over time. What are those costs? Primarily, it's going to be your time. It may also be costs associated with going and visiting a client, any materials, any software, if you're creating a physical product and sending it to them, that would be a cost. But those are the sorts of things that you need to consider per project. But really the cost for us, overwhelmingly, almost all of it is our time. And so if you want to go back, look at the earlier videos on how to create a billable rate, you want to know what your billing rate is so that you can put it out there. If you've budgeted to do a project and your project revenue is 15,000 and your billing rate is 150 bucks an hour, and it takes you more than 100 hours, you are not profitable. Okay. You could also think about this several different ways. You could look at your actual costs versus your projected costs. So there's different ways of looking at that. Anyhow, the point is your project, if you're looking at project profitability, you might want to have high project profitability for your key performance indicator, or most of your projects being profitable. You can do a percentage of projects that are profitable. Hopefully it's more than 50%. Anyway. All right, let's see here. I said if you divide the project revenue, the project profitability by the project revenue, that's your project margin, meaning you want a higher project margin. I know when we've talked and we've done this presentation in the past, this has been the one that most people have claimed to be a KPI for them. Their hit rate, meaning how many proposals have I put out there and what percentage of those proposals were successful. We certainly have a whole list of proposals that are out, things that are out to bid. We think about that also kind of by who's submitting them and who we're submitting them to and who we're working with. And that's, I wouldn't say it's a KPI, like a key performance indicator. It's definitely a performance indicator. It helps direct our process and thinking about who we want to work with in the future. And frankly, a lot of that comes down to, are we able to get the kind of revenue out of projects that are going to make sense for us in the long run. Utilization rate. So utilization rate, or some people talk about consultant productivity. This is looking at an individual. How much time is an individual on your team actually spending time on billable work, client-facing work, we call it oftentimes. What's their percentage of billable hours worked? And so somebody's below 50%, that means 50% of their time is spent doing things that are not client related. That's probably not a good thing. You want to make sure your staff or yourself is has a high utilization rate. I mean, this is certainly something you may be wanting to think about for yourself. We've talked about how people should be tracking their time. Toggle's free until you have more than 5 people on your staff. And so I absolutely suggest using Toggle. It's a great process. And you can create tags for whether you're on a billable rate or not. And you can download all those data. Standards or norms for the utilization rate, Derek asks. There's a lot of different conversation around this. You're going to expect that people who are more senior, who are doing more development work, will have a lower utilization rate. An earlier consultant who's brought on to do specific work should have a higher utilization rate. So we don't have a firm number, but I would like to see my research assistants who are a lower level at the 70% or higher rate. I have below 50% because I spend a lot of time doing administration work. Thanks for the correct question, Derek. Forecast rate, number of actual hours on a project versus the number of hours forecast per project. It's related to the last one. If I talked about this earlier with project profitability, if you expected to do 100 hours, $150 an hour, are you within that margin? And you probably want to think about what's your cost to do anything. And we talked about that when we were talking about the costs of running your firm a couple of weeks ago. For us, we bill at $100 an hour. Most of our people cost $100 an hour just to do anything, for them to check their email first thing in the morning. If they're putting that into Toggle, and that's an hour of work that we're paying them for, it costs $100 for them to the firm. So hypothetically, we want a better rate than that for our folks. So if the number of hours that they spend on a project, we don't want them to go too far over. So the forecast rate means, did we meet the percentage that we thought we would? We should be at or under the number that we forecasted. Overhead rate. Another thing that you want to think about, what are the costs to do your business? Facilities and administrative costs divided by your total organizational costs. So that's the cost that would be involved with that would be your office space, software, insurance, lots of insurance, and any of your non-billable time, right? Additional KPIs you might want to think about. What's your capacity? You want to have lower capacity. You want to be fully chargeable as much as possible. How much revenue are you receiving per consultant? Churn rate, meaning how often are you working on a project with a client and you don't have a return, another project that comes along with that. I work with a lot of clients who we continue to work more and more projects with. So we have a lower churn rate because it seems like most of our clients, once they join us, they stick around. That's a great thing. You want that because it's harder to create a great client. You have a great client, you want to keep them for as long as possible. Days sales outstanding. That's your accounts receivable divided by your total revenue, times your 365 days per year. I've got that in my notes. Effectively, how long have you been waiting to get paid? I'm always concerned with that. And so if you use QuickBooks, you'll see things that are more than a month old. It starts to get into for at least we set it up that way. If anything's more than 30 days past an invoice, I start to get a little concerned about it, and we start to do follow-up emails, because once you allow a client to wait to pay you, you've opened that door, the cat's out of the bag, it becomes complicated. So we're very quick to follow up after a month. And then what are your real fees per hour? What's the average of those? So that's going back to how profitable are your projects. If you scheduled to do 100 hours on a project, but it took you 200, your real fees are 200 divided by, in that same scenario, 15,000. So I don't know what the math is on that, but you are not making 150 bucks an hour. You are making, I guess it would be $75 an hour. So you're below what you need. So some questions for you to ask yourself. What are your KPIs? How do you set your goals? What's important to you? What should I have covered in this? And this will be part of the conversation that we're going to break into in a little bit. How would you calculate any of the things that I showed you differently? I didn't show this last year because we just recently came up with them as a conversation piece internally in the board between my partner and I. We are first, because we're a for-profit business, we are interested in profit. We want to make sure that our business is sustainable, so that profit is an indicator of sustainability for us. We do an employee survey. We are very interested in our staff and whether they're challenging themselves, whether they have pride in their work, whether they feel like they're bringing their whole self to the business. We do want to give bonuses, so that's related to number one. And in doing that, we have a belief in being equitable about that. So there's a lot of conversation with that. We're very interested in seeing feedback from our clients, knowing that they're happy, and defining happy is complicated. And then we're also very interested in that project piece. Internally, we're interested in making sure our hours are matching our budgeted hours. And then we have silly KPIs. So, and I think we've heard some of these in the past. Does your partner or spouse still talk to you? If they do, then you're doing very well. How many naps do you get while still being profitable? How frequently do you spend time at your daughter's elementary school lunches each week, or how many weeks throughout the year? How frequently have you walked your dog during the hours you should be working? This is actually an important one, vacations per year. Are you getting away? Are you recharging your batteries? Are you working constantly? My first 6 or 7 years, I was doing client work on vacation. I couldn't get away from it. There was no way to do it. And then related to that, how many times are you taking a vacation where work was not conducted, or you didn't check your email at all? I think I'm still yet to get more than a couple days away on a vacation without having to do something. I'm getting closer though. So with that, I'm going to pause there, and we're going to go into talk about any and all the things we've talked about today. See you later, YouTube.